Today, Matt Hougan of Bitwise thinks Ethereum's impending upgrade means it could outperform Bitcoin, and Twitter wants to pay content creators in stablecoins. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Digital currencies are trading lower today. By noon Eastern, Bitcoin had fallen back below $40,000. Ether traded around $2,900, and Polygon's Matic token fell to $1.40 despite making gains earlier this morning. For more context on the crypto market and what Wall Street analysts are watching, here's Crypto World's Tanea McKeel.
We're closing out another volatile week of trading for cryptocurrencies, with Bitcoin dipping as low as $38,000 on Monday and rallying as high as $43,000 just last night. But a lot of the headwinds crypto has been facing in recent weeks could be fading, at least according to Citi. In a note this week, the bank reported that the S&P and correlated assets like crypto would face selling pressure ahead of the April 18th tax deadline. Now that that day is passed, the second half of April could be more bullish for crypto assets. The case for crypto as a payment option is growing as well. Morgan Stanley points out that Strike recently inked a deal with NCR, which is a maker of point-of-sale systems, that could lead to many more stores and restaurants accepting Bitcoin as payments. Add to that, Lightning Network transaction fees are at near zero. Stripe is also partnering with Polygon to let customers pay in USDC and gaining corporate partners like Twitter. The growing trend of adoption could put wind in the sails of crypto assets going forward.
Okay, let's talk about the top stories, including the news on Polygon that Tanea just mentioned. Now, payments platform Stripe announced a new partnership with Polygon to let users make payments with the USDC stablecoin, and the first corporate partner is Twitter. Now, starting today, the social media platform will let some content creators take earnings from super follows and ticketed spaces in USDC. This is Stripe's first significant push into crypto since dropping Bitcoin support 4 years ago. Also in Polygon news, the Ethereum scaling platform is launching a brand new network dedicated to Web3. The new SuperNet, or collection of networks to make a larger network, lets developers build decentralized apps without hosting or operational fees. To bring in those devs, Polygon is pledging $100 million to new users who help grow the platform. Finally, Binance recovered a bit of the more than $600 million stolen from Axie Infinity. Binance's founder tweeted that $5.8 million in crypto was recovered from 86 different accounts. He laid the blame at a North Korean hacking group, just as the US officials had. The hacker's main wallet still holds some $280 million worth of stolen crypto. All right, for our main story today, let's turn back to the markets. Tanea caught up with Matt Hougan of Bitwise Investments to hear his take on the recent price swings and why he thinks that Ethereum could be a better bet than Bitcoin in 2022.
To start, let's just look at the prices of the biggest cryptocurrencies, Bitcoin and Ether to start. A lot happening with rates, a lot happening with the Fed. Are those two things still sort of the main drivers with those particular assets today? What's driving the crypto markets right now?
I think that's right. Crypto prices have been almost downright boring, right? They've had the lowest daily or monthly volatility in the last year and a half. For people who are in crypto, used to prices moving around, it's like watching paint dry. Underneath the surface, though, there's this really interesting tension and turmoil. You mentioned rates. Rates and the economic environment are a drag on crypto prices because they're a risk asset. So that's trying to pull crypto asset prices down. And then on the other side, you have strong fundamental progress in the crypto ecosystem, advances on regulatory, advances on the technology side, and that's trying to pull crypto prices up. So even though the market looks very quiet, there are these two really powerful forces working in opposite directions. It's a fascinating market, and it will be fascinating to see which one wins out in the end.
Bitcoin has been pretty range bound this year, Ether as well. Bitcoin sort of between 38K and 42K. And then similarly with Ether, sort of between 2,900 and 3,100. Do you see them breaking out of those ranges this year? If so, what would make that happen?
Yeah, I think there are a couple catalysts in the second half of the year that are going to dial up both of those assets. The one I'm most confident about is Ethereum. I think the merge, which is a technological upgrade to the underlying blockchain of Ethereum, is going to make it much more attractive as an investment for institutions. And I think you're going to see significant capital coming into Ethereum that's going to give its next leg up. Bitcoin, I'm more uncertain about. It really depends on how the macroeconomy goes, how hot inflation runs, whether we get a spot Bitcoin ETF. And those are all relatively uncertain. But I do think the merge and sort of the improvement in the token economics of Ethereum is going to make that a focal asset in the second half of the year. And we think it's going to be the crypto asset of the year for 2022.
Go a little bit deeper on the merge. What is it?
Sure.
When is it expected to take place? And how much do you think is priced in around that event?
Yeah, absolutely. So what it is a fundamental upgrade to the Ethereum blockchain that does three things. One, it reduces its carbon consumption by 99%. There's a lot of questions from the institutional community about the ESG nature of crypto assets, and this is a massive step forward for the second largest asset. The next thing it does is it reduces the new issuance of Ethereum by more than half. So we've talked about the Bitcoin halvings in the past and how much attention that's driven from investors. This is like a Bitcoin halving squared for Ethereum. So I think that's very exciting. And then the third thing it does is it's going to introduce, a proof of stake consensus mechanism that's going to let long-term holders of Ethereum, like the clients that Bitwise serve, earn interest on their Ethereum holdings. And we think those yields, at least initially, could be in the 8 to 10+% range. That's going to be hugely attractive for the institutional crowd. Any one of those advances, I think, would be the biggest story in crypto. The fact that they're all packaged into a single upgrade is big news. Now, the last thing you mentioned, when will it occur? It was supposed to occur in June, and like many software upgrades, it's been pushed back. I think as long as it occurs this year, we're still going to see that strong positive impact. If you see that deadline start to slip further and further away from the June that people were focused on, then I think there's some risk in my forecast. But most people are pretty confident we'll get it within, during the summer or in the early fall.
Sounds like it could be very appealing to institutional investors. What does the dichotomy between the two look like right now, between retail and institutional? Are you seeing one go up? Just what is sort of the state of either or both as you're seeing it?
It's a great question. Everyone in crypto is talking about sort of how retail interest has hit a lull. The crypto market, as I mentioned, is pretty quiet right now, very low volatility, and not surprisingly, that translates into a reduction in retail interest. But the institutional interest is like a freight train. It just keeps going. There is nothing that stops it. We have conversations with pensions, family offices, and hedge funds, and the volume of those conversations has increased dramatically over the last 6 months. There's been nothing about sort of the flatlining of prices that has slowed down that progress at all. So I do think crypto is becoming a more institutional market. Of course, if prices rally, retail will come back. But right now, it's retail going down, institutions coming up. And long term, I think that's very good for the asset class.
Okay, that's all for this week. But if you want to get more Crypto World, you can head over to cnbc.com/crypto world for full interviews and more. We'll be back again on Monday, and we will see you then.